Valens Research, Uniform Financial Analytics.
And for Amazon, right, what's most telling about this company is really what we can see from an earnings perspective. Many people often rail on how expensive Amazon is, saying it's ludicrous that it could trade at such a premium valuation. People have forgotten what cash flows are, what earnings are, and are just hoping and praying and, for lack of a better word, grip it and rip it, right? They're just expecting the best and not worrying about anything that could disrupt and believing in the hype. The reality is those people who think that are actually just misunderstanding how profitable this business is, right? This was not a company that last year generated a $23 EPS. Last year, this company actually generated $57 of earnings, over twice what the market actually thinks, what as reported metrics tell you this company earned. No wonder the market is so excited. Good investors who know the real numbers, I should say, are so excited because this company saw earnings not grow from $21 to 23.5 or 21 to 23, but rather from 49 to 57. This is a company that has rapid growth and a high return business and is throwing off way more cash flow than you realize. That's also why PEs weren't at 78 or 79 times in 2019 or at 64 times in 2018. They were downright reasonable for a company with this kind of growth in 2018 at a 26 times multiple, 37 times multiple in 2019. And even now at a 60 times multiple, it's not 140 times. And the company has strong earnings growth. And we come back and we can see this here with the as reported versus the uniform accounting metrics here on ROA too. It is not comprehensible to as reported, people who looked at as reported metrics, how Amazon possibly could be that interesting of an investment, because they look at the company and they see a company that has not grown nearly as fast as the uniform accounting metrics show us, right? Almost every single year, Amazon's real investment is higher than the distorted as reported metrics show us. But way more important, on an as reported basis, oh great, Amazon's ROA has recovered to 5% in 2019. No, it hasn't. Amazon, even with the massive growth that they're producing, is throwing off a 15% ROA, 3 times its cost of capital. Just to comprehend, for you to get as big as Amazon is and continue to grow your asset base by over 40% a year, every year but one for the last 10 years, and yet still be able to generate a 3x the cost of capital ROA is mind-blowing. And that's why investors like Amazon so much. But you would know that if you were looking at the as reported distorted metrics for this company. And right, I just hope these 5 companies have painted a picture for you guys in terms of why it is that as reported metrics are so problematic and why they will literally cause you to come to wrong investment conclusions as an investor, and why you should therefore not use them, but instead leverage tools like uniform accounting like the Valens Research app.
Valens Research, the world's leading source for uniform financial analytics.